Hello, everybody. Kirk Spano. It is 2 days to my birthday. All right, Monday, February 5th, 2024. And I did not write a brand new retirement income options because the market is wiggly and shaky. And I really don't want you to do too much until we see how much it's going to wiggle and shake. This is the angst that I talked about would likely be coming after we set new highs. So in January, the stock market set new highs. And now we are getting angst, which might last up until close to the March Fed meeting. Stock market might do what I have said to you the Federal Reserve wants to see, which is see a correction. So the stock market's going to shake and wiggle and beg the Federal Reserve for a little bit more money. And I think the Fed will probably come through, if not March, then in May. But the first Fed rate cut will come in a month that starts with the letter M. How do you like them apples? All right, so take a look at the last retirement income options piece. If you get a chance, these are probably the same stocks that you can sell puts on right now. They've all dropped a little bit in price or stayed about the same. What I did update and what I want you to read along with sorry about that. What I do want you to read is The Great Normalization by Jerome Powell, and take a look at the YouTube that we did on it last Saturday and try to wrap your head around what's going on and why I'm saying that the Fed is going to lower rates in March or May. And they're going to talk about tapering the quantitative tightening as well. So if we get more liquidity, the stock market ultimately goes up. This article covers a lot of that. And in fact, at the very bottom, I show a chart. This is where the bank did their special facility last year and see what happened to stocks. A little pullback and then follow through. A, B, C. Pretty neat on that one. 1, 2, 3. So here we are getting a little pullback. And I think then we get our last euphoric rally. I updated the grandpa stocks on both websites. Been doing a little bit of updating to the fundamental trends with the new analysis popping up right here. So let's take a look at what I did with the grandpa stocks. I updated it to be even more usable, and I spent a couple of weeks reading analyst reports and the new earnings reports where they had already come out. And I would like to get this list up to 30 stocks to compete with the Dow Jones. However, here's my list of fortress and wide moat companies that I can sleep through the night pretty much anytime I buy them on a dip. Which stocks are buyable right now or close? Alphabet, Rockwell after that big drop, Autodesk, Bristol Myers, Chevron, Nike. Now, some of these have a little bit more bottoming process, but they're getting close, so monitor them. I set this up so that you have a chart and then the basic advice on how to handle it. So let's take a look at Nike. This is what their chart looks like. I have it up in the main setup here. And what I did is I experimented with different spots that the market analysis showed could happen. And then I picked out the one that I thought was most relevant. I know a lot about Nike. I was a kid when the first Air Jordans came out, which was pretty cool. And I've been watching Nike for a long time. It's not been a super exciting stock lately, but in general, it's been a pretty good stock to own. And here we're getting a correction. If you take a look at this long term, you can see this area to that area was one trading range. And now it looks like the new trading range is kind of right where we are back again. Maybe a little lower. This company churns out money, really has very little competition that can do much to it. I show the 2019 period to 2025 because this accounts for the bottom of the 2018 correction, which seems to have become the support level for the stock market. Basically got down there during COVID, but did not go through. Took a lot of stimulus to hold us in place during the financial heart attack that was COVID, but we stopped going down relatively quickly when the Fed printed money. So now we have a flat area developing here for Nike, and I'm really just using this one as an example. And you see, and the auto patterns did not draw it, but you can see that this is starting to look like a triangle that'll get a breakout at some point. And I would anticipate that that is right around this level, right about when it hits this blue line is where you can buy it. So if it gets down to here in the next couple of weeks, 90-ish, probably a buy. And that's for people who want this type of stock, something that will beat the stock market by a point or two over time and have really no risk of permanent loss. All of the companies on this list are wide moat companies, or what I would consider fortress. The fortress from the wide moat, the difference is a gigantic pile of cash. And a lot of these companies have a gigantic pile of cash. If you take a look at the top 5, Microsoft, Alphabet, Amazon, Apple, Berkshire, they all sit on mountains of cash. That is their insulation. They all can buy back shares if their share price drops too much, which is great protection for you. It's a heck of a margin of safety. And I think it's a pretty neat way to figure out, not only do these businesses do great, they're sitting on a mountain of cash, so that if the stock price drops, they're just going to buy back shares, which is good for me. So these fortress and wide moat companies, which Morningstar and Value Line and a bunch of other analysts agree with on, are companies that you can buy when they get down to the right price. I did not think that Rockwell was going to get whacked the way it did. And we have to wait to see if it's going to continue falling, because it could break down all the way to the low 200s. But if it starts holding up here, probably going to want to buy it. I think that their automation business is amazing. And with the incorporation of AI, they can do even better. You'll notice on this list, when I go down to the notes, I discuss these companies. I just give kind of a quick take. And you will pick up on a recurring theme in here. I have talked to you about companies that can do well using AI. So not only creating AI, but using it. And most of these companies will do well with AI. So I think that these are stocks that you can buy. And I found 21 of them, and I'm going to try to get it up to 30 because I want my own competitor index to the Dow Jones Industrial Average. You will notice that some of these are on the Dow. Both the punch card stocks and the punch card growth stocks I will update next weekend because I'm done working for this week until Friday. And I decided to keep those as quarterly lists, but to really be religious about the stocks of the week's update. So the stocks of the week updates will look a lot like this. Okay? Give you some thoughts and then some updates on company. Now, one of the things I did with the grandpa stocks is I did take all of the semiconductors off the list. And it's not because they don't deserve to be on there. In fact, there was 9 of them that are borderline grandpa stocks. And if I really wanted to get to 30, I would have just added them. I don't want to add the semiconductors for one reason only. There are so many good ones that why would we introduce the single stock risk rather than just buying the ETF? I think that's where I'm at. I like advanced micro devices, love NVIDIA, but they both have competition coming in the next 3-4 years. Those are relatively fast changing industries when technology changes. And the stock market doesn't usually even wait for the products to be on the market. Once they know that the company has it and is going to get it to a fab in the next year or so, they hurt or reward the various companies. So I will do a separate semiconductor piece. And if you want to buy the individual stocks, have at it. I am going to use the semiconductor ETF instead because for me, it is difficult to pick the very best ones in most cases. And for a while, it was NVIDIA. Definitely was NVIDIA. And AMD, we bought in single digits. Long time ago, should have held it forever, or at least for a long time. There will be times when certain stocks get beat up. What did we talk about a year ago? A year ago, we talked about Western Digital and Seagate. And look at what's starting to happen to them now. Not exactly semiconductors, those are hard drives, but they have expanded into cloud management. So sometimes when these companies go through transition, and we've talked about this theme before, transition being a period when you can really get a good deal because people are impatient. I've been thinking about this in the context of Elliott Wave. Why does Elliott Wave, when interpreted correctly and when overlaid with the right fundamentals and the right quantitative stuff, really draw a good picture? Well, it's when it can identify the recurring patterns in human thought and emotion. When Avi says sentiment speaks, I think he's 2/3 of the way there. I don't think he's interested in getting the rest of the way, which I think is his weakness. But we see the same patterns over and over and over again. We see that the Gartner hype cycle plays out over and over again. And there are variations by degree and by timing, long and variable lags. For the Federal Reserve talk about that. But the same patterns play out over and over again. People get hyped up on something and spike the price up, and then growth inevitably can't keep up, or there's some disappointment in a business, and the stock goes down. First, your profit takers, then people who panic because it's falling, then finally the people who sell into the abyss. By that time, the company is generally undervalued, and your value investors come in. But the psychological damage has been done at the margins of the market, where the retail market is, where the retail investors are. It takes a while for that to build. And that's why those sideways patterns, or those ones that are gently drifting up, are pretty attractive, because it shows that there's institutional and rich guys buying, and increasingly more rich women buying. But the public hasn't picked up on it yet, and we know the price moves at the margin. So those last buyers are the ones that really spike the price up, really ramp it up, make it go parabolic. If we just try to understand those emotional patterns, and we stop asking questions like, why did it go up today? Why did it go down today? And we look at the fact that very few shares change hands in any given day against the float that is available, you'll realize it really is, in a lot of cases, just traders being traders. If you want to try to play that game against the supercomputers and the shooters of the world, then at least get on Shooter's team. I think that what we're about to see, and this is with it being fairly pervasive that everybody expects the Fed to loosen sometime this year, a little bit of angst in the market because you have the traders being traders. I don't think you're going to see mass selling in the stock market. I just think you'll see the traders being traders, and they'll push it down as far as they can, which won't be too much. Probably a single-digit amount on the indexes, 5, 6, 7, 8, 9%. As we get closer to March, and the Fed meeting, and as the next bank has a problem, we already saw New York Community Bank Corp, and the expiration of the bank facility from last year ending on March 11th, I don't think it's unlikely that at the Fed meeting they announce, hey, we've decided to extend that facility and maybe increase it by a few $100 billion of the B. And we're going to start winding down quantitative tightening in April or May, and get it down to $500 billion a year instead of $1 trillion a year. And so that new bank facility that's coming, it's absolutely coming. Don't know what month. I suspect March, could be May. And quantitative tightening ramping down, there'll be no liquidity sucked out of this market, which means that the marginal money, which is the retirement plan contributions, and we are at full employment, and net direct foreign investment, which looks like it's starting to ramp up, with the dollar weakening a little bit, could get a heck of a rally into the end of the year. Second half of the year could be spectacular. So for the next several months, you could try to be perfect, try to catch the lowest day in the market, or even the lowest week would be pretty good. Or you can accept the traders will be traders, and some of those moves will be so fast, then in reality, they're inconsequential to you, because by the time you react, it'll be over. Scale into your favorite investments when those favorite investments give you a price. The micro caps and the small caps are beat to hell. But if you take a look at a company like, say, Spire Global, you'll see what has it been doing lately, especially since I told you to buy it in September, August, and September. It's been drifting up. And in fact, it really hasn't done anything negative since it fell off about a year ago. This is a nice consolidation area. Let's see what some of these tools tell us. Definitely could go up here. Clearly could fall off a cliff, but this is based on the past. This red line is pretty strong support. That's what that is. Let's take a look at this one. Look what's developed. An uptrend. Pretty neat uptrend, and it hasn't even bent yet. See if there's an auto pattern. No, nothing. It's got a $10 price target from its bottom. That's pretty interesting. And a lot of these small and micro caps, the ones that aren't on the Russell 2000 yet, have these types of patterns. So when Tom Lee says you can see 60% gains in microcaps and small caps, something I've been telling you for a couple of years now that you have to watch for, because these are the biggest gains that you'll ever see, with the exception if you pick out the 10 large caps and mid caps that do it. But this is a group where there's probably 20, 30, 40, 50 stocks, many of which I'm not aware of, that can do this. So from 7 to 10, it's about 50% right there. There's a lot of micro caps and small caps that can make these big moves. And if this starts to bend up, because it doesn't cut all the way back down to the red line again, the red line will move up, and that slope starts to bend, and people start to see that it's performing and it has momentum, that'll beget more momentum. And you'll get a FOMO rally. There's a lot of stocks like this in small and micro caps. Take a look at the punch card growth stocks list. So this week is a study week, and let's see what the market's going to do about Jerome Powell trying to talk it down. I don't think he's going to be able to talk it down too much, but he knows the liquidity is coming, and he'd really rather that the stock market didn't get ahead of itself. And I'm sure he wants to keep the price of gasoline and inflation down going into summer and the election, because inflation and the price of gasoline in particular are huge when it comes to election. I'll just tell you right now, I don't think Jerome Powell wants to see President Trump back in office. So there is a political aspect. But really, he knows that he has to support the banks so that the banks support the U.S. Treasury market, and that extra liquidity can create bubbles. And he wants to try to avoid a bubble. We have seen huge depressurization of the asset bubbles in the last couple of years. Stock market is basically where it was 2 years ago. But companies have right-sized, have let AI and other rationalization improve their margins and the way that they manage their companies. Time heals all things, usually. And companies have done a good job the last couple of years, and their stock prices in general aren't higher on aggregate. And the lower you go on the capitalization scale, the lower their prices are based on what those businesses are worth. We have the biggest discrepancy between large cap and small cap price to earnings ratios in 46 or 50 years or something. It's alligator jaws. While indexing means that we probably won't get 10 or 12 years of small cap outperformance like we did last time, I bet we get 2 or 3, maybe 5. See how long it takes for FOMO to play out. All right, I'm going to take a shower, pack my bag, and jump on an airplane. I will be back on Friday. I'll have my phone, so I'll jump into the chat here and there if anything particularly important happens in the world. But I think that really watch and see what happens this week. What do the traders do? Do we get a 7, 8, 9% correction? If we do, probably very, very buyable. All right. Have a great week. I'll see you on Friday and Saturday.